Hello, hello, hello. Happy Thursday. Happy Thursday, everyone. How's everyone doing? Good morning, Patrick. Good morning, John. Sterling putting in the PPI numbers. Good morning, Martinez. We'll go over those in a second. And jobless claims. Heinrich. Good morning. Yeah, we got Williams speaking. Also, what else? Where's Sterling's good morning? Did I miss your? I know you put it in here. Good nerd is good morning. All right. So, sort of preoccupied today. Sorry about that last live stream. Don't know when it's going to resume because Cox was at my place yesterday in Scottsdale and they said, oh, well, you know what? We got to re-tear up the whole street and run new conduit and we need Scottsdale to go in with that. So we don't know when you're going to have internet at all. They were supposed to have it fixed at least across the street yesterday and now they gave me more bad news. And then my backup solution is now back ordered. So I have no internet. So we will see what happens. That's why, you know what? I hope you stick around and wait for me to show back up. But if it's a little more delayed, then there's nothing I can do about it. So that's why I might be a little preoccupied. By the way, if you're ever preoccupied by stuff and, it's not the best time to do short term trading. You know, focus on what you need to focus on in life and don't try to force trading. And if you're in longer term trades, just manage the positions. That's something you don't have to do every day. So let's just get to the numbers. By the way, I really hope, and that's why this is titled, just please trade well and manage your risk first. This is, these markets are a little crazy right now. Markets now reacting. The PPI month over month coming in better than consensus slightly, but still climbing. They're coming in like it's zero or negative. Core PPI coming in line year over year, coming in at 2.4 versus 2.3 and up from 2.1. Where do we got the standard PPI coming in a little better? So, but the market, and I was looking at this. I think Zero Hedge highlighted it today also that the energy component was really weird. Like the energy component in the PPI numbers, I think Zero Hedge actually put up. So yeah, like. But I was looking at other stuff, and some other people pointed this out. Here's the producer price index for gasoline. Here's the national average gasoline. I don't know what's going on here. It was tracking pretty well, and now it's, yeah. So, it is what it is. But the market's really celebrating it after the CPI print. What do we get with jobless claims? We have the initial jobless claims still coming in slightly better. We have the continuing jobless claims. Where is it? Continuing jobless claims popping up just a bit. So nothing catastrophic. We also have Williams speaking now. Uh, I don't even want to talk about that. He miraculously sees inflation just dropping to 2% next year. Okay. Really, opinion from Sterling. U.S. has a massive censorship industrial complex, corporate media enabled to support. Most elected representatives either support or are silent about. Eric, good morning. PPI is a lie. Hey, Jacob. Good morning, Anissa. Good morning, Daniel. Whenever you resume, have a safe and stress free drive. I hope it's stress free. I really hope. And I hope everything goes well with the movers showing up tomorrow, but we will see. All right. Thank you for all that. What else we have? We have Williams speaking now, who is very dovish this morning for my interpretation. We've got Collins up at 11 a.m. We've got Bostic at 12:30. And who knows if somebody else is going to pop up too. Tomorrow, where I won't be here, remember, tomorrow earnings, first quarter earnings with the banks kick off tomorrow, and consumer sentiment preliminary numbers for April, including the inflation expectations. And then you got Bostic and Daily. Sorry, I won't be here for that, but things will be loading on a truck. So far, market liking the PPI numbers coming out this morning, bouncing. Very green today. Groups, let's just do a quick refresh. Everything's green. Industrial's lagging, but everything's green. Technology and comm services, consumer cyclical, all leading. Fed watch. Guess we're going to have to refresh this too because it was pushed out till September. Let's just see if this pops up again where it is now. Yeah, still barely, still pause through July, and then the first cut in September. And so two cuts still priced in with the first cut in September. At this point, fear and greed in neutral mode. Again, today, Constellation Brands CarMax. I did not look at them. Again, I'm dealing with too many things right now. And tomorrow we got JP Morgan Chase, Wells Fargo, BlackRock, Citi, Progressive, and State Street. So we'll see how those earnings come out tomorrow. So far, we have the little bounce. Now, little divergence pattern down here with, you can see the key support coming in with the two lows. It's a really messed up double bottom that's a lot lower probability. Why? Because it's really shifted over here. A lot of people would say it would be here, but no, it's technically there. So S&P, you can see how it's really lopsided with these multiple bottoms in there on the 1 hour. So I just use these as targets going up. Take this one with a grain of salt. It would need, for me, a 4-hour close above 52.26.50. And then you see even the third target is in the wick. So it's really just a return. You don't even really need these targets. I'd be using, personally, here's what I'd be doing. Looking at the 52.33 area. Why? Not only is it the 37.5 retracement harmonic from the still channeling corrective pattern, because it's still in the corrective pattern, but that's also the breakdown area you see here. The breakdown area right there. And then we have a major cluster back at 52.54. So if it continues higher, even tomorrow, those would be the first two targets. If you're looking, again, beyond that, as long as it does not make a new low, the next key target is 52.73.50 on a closing basis. Then, if it were to get above that, it would shift the probabilities to a potential retest of the high area after this sell-off. Now, remember, the S&P is still in neutral mode. The rotation zone has not crossed. It's closed below it, but that's neutral mode. The longer term is still in bullish mode after hitting, and many times you get a first reaction off the rotation zone. We've now returned to the rotation zone, and this would be the first reaction. This would not be something that I'd be looking to be aggressive of personally to the upside, because it can, even if it closes above the 52.73 area, can still just top out here and make a more significant topping pattern. Also remember, on the weekly, we still have some room to run back down for cycles. Next key pattern, if these lows are broken, the next key area, minors 51.57, but more significant is right about 51.35. If you lose the 50 on the futures, then my next key major target is back to that 5,000 area. The NASDAQ, we have, again, it's already confirmed. This one, look at it. You know, this is where I just use the targets. This 18, it's roughly 18.3. You see where the 37.5 harmonic is, and the stop reduction target, I just use right around 18.3. And then you could use another stop reduction target around this 18.344 area, and then 18.380. Look, that lines up nicely with the 50% harmonic. So those would be the targets even for follow through tomorrow. The key level is 18.462.50 on a closing basis. If it closes above there, the probability shift for the retest of the potentially high area. If this breaks down and does not, look how it's trading against the 50 right now, you still potentially have that double in place. It's getting very extended to the right-hand side, though. So it pretty much needs to trigger soon. If it closes above that 62.5, just take it off. Let's see who else is here. Let's see. Who did I get there? Hey, Eric. Thank you for safe travels. Hey, Charles. Good morning, Mark. Thank you, Richard. May the force be with you. Thank you, Stafford. I really appreciate you tuning in. Thank you very much. Hope to see you when I resume the live streams. Thank you, Christoph. Yeah, this will be the trip of the dog's lifetime. Thank you, Jeremy. Thank you very much for all the well wishes. And again, please consider tuning back in even after the break. I'm sorry I won't be here. Uh, Today, if it rolls over, key support is about 18,160, and then the low area where there was a lot of buying pressure in the Nasdaq. Look at it, not just today and yesterday, but back on last Friday. You see the buying pressure there. So really pay attention to this area on the Nasdaq, because if that's going to break, it could see a quick drop. The Dow, overhead resistance, very key overhead resistance. Now remember, the Dow on the daily is in bearish mode now, still in bullish mode on the weekly. But the Dow on the daily, the key resistance area is 39. 39 is very, very key resistance on any bounce. So that's what I'm keeping an eye on. And then above that would just be a return to the rotation zone. And roughly, you're looking at about 39,140 to right around 39,285 as the next key target. If it breaks down below today's lows, the 62.5 harmonic from the lows in January to the highs in April is very, very key on a closing basis. That's about 38,450. If you close below that, that shifts the probabilities to retesting the lows from mid-January. Russell, again, spiking to 50 to 62.5. This is another one I'll be looking for a rollover. Key resistance in the Russell is 2074 is the first key target area on that. But this is another one we'll be watching for a rollover play. But then 2003 is the key closing area for that to the downside. To the upside, if you're looking for the Russell to really recover, and retest the highs from Monday the 1st, would need a close above 21. Just go 2111. 2111. The VIX, big reversal off that PPI. I mean, everybody's still looking for a reason to celebrate anything. PPI is still elevated. CPI came in really hot, but any market print that they think the Fed's going to miraculously cut is getting celebrated now. Even though it's down from 6 cuts to 2 cuts, with the first one potentially being in September. I mean, the market's still celebrating everything and just looking for that cut, so it's in buy mode. So, key area I'm watching today is 1550. The DAX pulling back to that very key support level. Keep an eye on this, especially if the DAX closes with a %B buy going into tomorrow, or, if it triggers, that would be above today's high on a closing basis. Okay, if this bounces back up, you have to set up the %B correctly, remember. But if this bounces back and gets above 0, then there's no potential setup. The notes finally finished the double. The notes finally finished the double, did close below 62.5, so we could still see higher yields and lower prices even after this bounce. The key resistance now is back to 109.10. So bounce and rollover plays are still in the areas for the notes. The yield, this was interesting, with settlement did not, because I'm like, all right, the yield, the micro yield contracts, it closed right in front of the 62.5, and then they came up with a settlement and they settled it above there. I'm still going at it. Didn't officially close there because that was a weird settlement. But either way, you almost made it up to that 4.59 target. It's close enough with that 62.5 area. I'm just pulling it off at this point. Still going to be watching for higher prices and higher yields coming in. The really major support is this 4.35 to about 4.4 is very major support now in the yield. Okay. What else do we have? Dollar index. Big rocket ship day. That was big rocket ship day yesterday. So we're looking at pullback. Key support now is 104.60. Key support is 104.60. But, you still have that. The really the horizontal head and shoulders messed up. I'm still in place, or not messed up. Oof. Dollar, crude. Confirmed but did not trigger the channeling double. So that's still not triggered. And it's getting very extended at this point. Just pulling it off. Just focus on any retrace. Focus on the bottom of the channel. And very key support about this 84.50. Other than that, still needs to get a 4-hour close above 86.50 to resume the trend to the upside. We are getting closer to daily cycles. And so far, look, this is pretty much just a sideways correction, getting to the cycles daily on the bottom, back to the rotation zone. So going to be watching next week for a push higher in crude. Gold. What is gold? Still basing sideways correction. Gold daily cycles are heading down. The major support is still right around this 23.25. The next key target is 24.07. Silver almost at 87.5. 87.5 rule almost completed there. So just keep an eye on there. Copper also stalling out. This, remember, is a major top area. So copper moving sideways, holding key support about this 425. As long as that holds. If that drops, if that breaks, then my next major support is 415. The yen almost taking out the next 153.36 target right there. Right there. So I'm going to be paying attention to that, especially now. The major support is back at 152. So unless we get that close back below 152, the trend on the yen is still up and the yen is weakening. The euro, this, if you're wondering for the double, no. All through all the wicks. So anything would just be a bounce right now in the euro, with the major resistance coming at about 107.80. Bitcoin still holding up, getting extended to the right, so this double might be coming invalid soon, but nothing really to talk about there. The spiders, let's just go off the big picture stuff. You're still on the closing basis, as long as today's low is not taken out, it's 519.92. So just roughly about 520 on the closing basis. The major resistance is 518.20 area to 518.40. Okay? Technically, you break above yesterday's high with a follow-through close, it's a percent B buy. So that's very key. I'd just be using the harmonics on there. The Qs, the key closing area to be watching for is 444. The levels today are about 440.50. Then 442.25 is very major resistance. Good morning, Legion Reaver. What else do we have? Thank you, Kalani. Thank you for tuning in. Thank you for tuning in, everyone. Let's just take a look. Tesla, we have not much going on. Unless it still triggers that double, that's the only bullish case, which the 50 would nearly be out of the way then. Other than that, it's still in long-term bearish pattern after hitting the first two targets. So even if it triggered this bullish case, it would just be a potential return to the highs at the end of February. Nothing significant there. That's the only bright potential spot for Tesla bulls. Other than that, it looks lower for longer. Nvidia, pretty decent bounce yesterday, but still not triggering the double. Confirming the double, still not triggering. We'll be watching. This is now in, could be going to bearish on the daily, and still remember, we finally hit the weekly rotation zone. So we might be getting that little bounce off there before the next potential rollover play. Apple closing Remember, look at the rotation zone just holding. Apple breaking to the lowest close since back in, end of October. So it took out another key line in the sand. The remaining one is 165.67, so I'd highlight that level in Apple. Why? That triggers a massive topping pattern. A massive topping pattern. Could easily return. Look where the 200 is with the 62.5. And the first target of that massive topping pattern is right below there. So even if you don't trade it, pay attention to Apple over the next few days. What else? You had KRT. KRT. Huh. I've never looked at containers packaging. Interesting. What did it do? Support level it closed yesterday, gapping down below pre-market today. Don't know. Yeah, that's if it doesn't hold that 50, that would not be good for it. Let's take a look at the S&P. Then I really ought to run into the open. I got to deal with a bunch of stuff today. I'd be looking for, unless you get incredibly strong tick, I'd be looking for a potential roll over at least post open to test some of these key levels. Let's just take a look at the shorter. I mean, this is the reaction to those PPIs. So your support level is about 52.08, going 52.08 to 52.09 with any pullback into the open that needs to hold. XRT, thank you. XRT. I was wondering KRT. Yeah, that's not good. The retail is I've not updated this one in a while. But the retail stuff from the last run up, you're going to want to pay attention to 71.89. Okay, if it can't get a bounce in there and it's losing some major support, this is some major support getting lost in retail. So if you start closing below this 72 area, 71, what is it technically? 71.89. I'd really be watching for a reconnect because the probabilities would shift to the retest of the January lows, and look where the 200 is. There you go. I will thank you for tuning in, Coco. I will be putting on sunscreen before going to Arizona. You are welcome, Anissa. With that, I shall talk to everybody. If I can do any kind of updates, I will. Don't know how that's going to work, but again, maybe I can tweet some stuff out also. So if you're not subscribed to @MGArnold on Twitter, you might want to subscribe to that just to see I can give some updates on that. So that would probably be the best way to follow stuff. With that, everyone, trade and manage risk first. Trade well. If you don't have a trade, sitting on your hands is the best thing. Just don't do anything silly, and I will see you all when I can reconnect. Thank you, Sterling. Thank you, Mark. Again, thank you, everybody, for spending your mornings tuning into me, and I'll talk to you all later. Bye for now.